Greetings and welcome. I am Dr. Denver. Thanks for checking out my 7th presentation on basic accounting in alignment with the chapters in my book, Accounting 101, Easy Accounting and Bookkeeping for Beginners. This session is about concepts presented in Chapter 6 regarding year-end adjusting entries, post-adjustment trial balance, closing entries, including the income summary account, and net income. Adjusting entries. At the end of an operating period or accounting cycle, accountants make adjusting journal entries for unrecorded revenue and expenses to determine the true operating results for the period. Examples of such adjustments include amounts paid in advance for insurance and rent, called prepayments, accruals, unpaid wages and salaries of employees, depreciation expense, bad debts, interest accrued, transfers from unearned revenue to earned revenue, and inventory adjustments and cost of sales. After the adjusting entries are completed and posted to the general ledger, a post-adjustment trial balance is prepared and the debit and credit columns total are checked to see that they are equal in accordance with the double entry accounting concept discussed earlier. And after the accountant has reviewed the trial balance and is satisfied that it is in order, he or she proceeds to the next phase of the systematic steps in closing the books. Closing the books refers to closing out all the nominal or temporary revenue and expense general ledger accounts by transferring their balances to another temporary transitory account, the income summary account, which is then closed out to the retained earnings account. The income summary general ledger account summarizes the net income or loss in an accounting cycle as a temporary clearing account. It is not a typical general ledger account and is only used with the end of period closing entries to determine the net income or loss for the accounting period. The retained earnings account is shown in the equity section of the balance sheet. A general journal is used to record the closing entries required to clear the balances in the revenue and expense general ledger accounts at the end of the accounting cycle. Net income or loss is shown at the bottom of the firm's income statement for the period. It is the net difference between the total revenue amounts and total expenses for the period, and the net income or loss is added to the retained earnings account shown in the balance sheet. Thanks for watching this presentation. Have a great day.